You are watching Market Watch, the brief overview of the key events from the world of finance. Let's start today's review with the cryptocurrency market, which remains in the spotlight this week and can become both the main source of delight and disappointment for investors. It is important to note that the positive sentiment is largely due to expectations regarding the approval of the application for the Bitcoin ETF creation. Investors are betting that the decision of the U.S. Securities and Exchange Commission on a number of applications for this investment fund will be announced in the next few days. Last week, demand was provided by rumors and speculation about the possible approval of several applications at the same time. This is a strong fundamental factor contributing to the strengthening of Bitcoin. But despite the significant growth in the last few weeks, there are still many skeptics among professional investors and traders. They do not believe in the readiness of the U.S. Securities and Exchange Commission to approve applications for the ETF creation. And although a lot of factors indicate a high probability of a positive result, the risk of failure also remains quite high. It is largely due to the current position of the U.S. presidential administration. Previously, the question has been repeatedly raised that this investment instrument may appear only after the change of the U.S. president. Therefore, one should not completely exclude the possibility of a negative decision, which can lead to really strong sales in the cryptocurrency market. And now let's move on to gold, which remained one of the main outsiders last week. The fact is that before the explosive growth, the price of gold was declining, due to the high yield of U.S. government bonds. Therefore, the so-called adaptation of investors to the geopolitical situation in the world reduces the risk premium, which was the main reason for the growth in October. Simply put, investors began to take profits on long positions, shifting the focus of attention to an alternative to expensive gold. Of course, we are talking about government bonds, as well as the stock market, which has significantly recovered last week. The growth of key U.S. stock indexes confirms the overall increase in demand for risk, putting pressure on gold. The situation in the oil market is similar. Last week, investors focused on changes in oil reserves, as well as the prospects for changes in demand. This was clearly visible in the reaction to the release of data on changes in exports in China. Given all this, any confirmation of a slowdown in the U.S. and Chinese economies will contribute to a further decline in oil prices. But at the same time, it is extremely important to monitor the reaction of OPEC+. The cartel can intervene at any time, trying to keep the black gold market from further decline. Let me remind you that the nearest strong support area is a narrow area of $73 to $74 per barrel. Its breakthrough may provoke an additional wave of decline, up to $67. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.